What if the reason your investments feel stressful is because you're playing the wrong game entirely? The investors who win long-term aren't the ones chasing 25% returns.
Okay, let's be real for a second. Opening your investment app lately, it can feel a little painful, right? Seeing all that red, watching the numbers go down when they're supposed to be going up, it's enough to make anyone feel anxious. But what if I told you there's a simple, clear plan to get through all this chaos? Well, that's exactly what we're going to talk about.
If this quote hits a little too close to home, trust me, you are definitely not alone. So many people are feeling this exact same way right now. But here's the good news. Feeling lost is just temporary. This is all about cutting through that noise and giving you a clear, actionable path forward.
So why does it hurt so much? You know, the root of all this anxiety isn't just the market falling. A lot of the time, it's a fundamental mismatch between our expectations, our goals, and the investments we actually chose. Let's break that down. I mean, this slide pretty much captures the story of the last few years, doesn't it? So many of us jumped in with this idea of getting 25% returns every single year, getting rich quick. But the reality, as we're all seeing now, is that markets can be flat for years on end. And chasing those crazy high returns without the right strategy, well, that just leads to chaos. And this right here, this is the #1 mistake. Equity investing, stocks and stock funds, is not a short-term game. It's an incredible tool for building wealth, but it needs time. We're talking at least 5 to 7 years, maybe even more, to ride out all the ups and downs. Using it for a goal that's just 2 or 3 years away, it's like planting an oak tree and expecting to have a picnic in its shade next summer. It just doesn't work. The time horizons are completely mismatched. All right, so how do we fix this? Well, it all starts with a new philosophy. It's about a mindset shift, moving away from chasing the highest peaks and towards something that's way more powerful and way more sustainable in the long run. I want you to really let this sink in for a second. True long-term success isn't about those amazing years where you're up 30%. It's actually defined by the bad years, the years where you protect what you have and lose way less than everybody else. That, my friends, is the real victory. And this example just illustrates that perfectly. Take a look at Investor A. They're all in on equity. So when the market drops 20%, their portfolio takes the full $20 hit. Ouch. But Investor B, who split their money between stocks and debt, totally different story. Yeah, their equity part drops by $10, but their debt portion actually grows by $3.50, which helps cushion that fall. The final result is just staggering. Investor B is only down about $6.50, while Investor A is down a full 20. That's a 67% smaller loss. So who do you think is going to recover faster when the market turns around? It's not even a competition, right? Investor B is in a much, much stronger position. Here's a really great way to visualize this whole thing. An all-equity, super high-risk portfolio, that's like a roller coaster. It's a massive thrill on the way up, but it's absolutely terrifying on the way down. A properly diversified portfolio, though, with a good mix of stuff, that's more like a gentle park swing. It still moves, it still has momentum, but it's smooth and predictable. And that's the real question you have to ask yourself. Seriously, forget the thrill for a second. Which one of these rides can you actually stomach for 7, 10, maybe even 15 years without totally panicking and jumping off at the worst possible moment? Your emotional comfort is a huge part of your long-term success. Okay, so let's get practical. If you've got a 7 to 8 year investment horizon and you're feeling kind of overwhelmed, this is your playbook. We're going to build a simple strategy, a simple plan where every single investment you make has a clear purpose for your long-term goals. You know, the biggest trap for investors is thinking they need some super complex strategy with dozens of different funds. You absolutely don't, especially not when you're trying to get back on track. On this journey, believe me, simplicity is your greatest ally. And here it is, the two-fund strategy. It is just so elegant in its simplicity. Each of these funds has a very specific job to do. First, you lay a stable foundation with a multi-asset allocation fund. Then, for that growth engine, you add one single multi-cap fund. That's it. That's the whole plan. Now let's look at why these two work so incredibly well together. So a multi-asset fund is basically your just add water diversification tool. Its job is to be the stable core of your whole portfolio. By law, it has to hold a mix of stocks, bonds, and gold. This automatically creates that gentle park swing we were just talking about. It's the perfect starting point for managing risk. The multi-cap fund's job, on the other hand, is to be your growth engine.
This is what gives you smart exposure to the broader stock market's potential. And it doesn't just bet on one type of company. It invests across the board: large, established companies, mid-sized growers, and the smaller, high-potential businesses. It gives you a piece of the entire market. Okay, so we have the strategy. We know the what. Now we've got to talk about the most important part: the mindset. Because in the long run, your success isn't going to be determined by which funds you pick, but by the kind of investor you choose to be.
There are really only 3 types of investors out there. You've got the lucky one, who gets in at just the right time by complete accident and suddenly thinks they've cracked the code. Then you have the unlucky one, who chases all the hype, gets burned, and blames the market. And then there's the disciplined investor. They have a plan and they stick to it, month after month, year after year, through good times and bad. They're the ones who actually build real wealth. You have to consciously choose to be that person. And this is what that disciplined journey looks like. Now, I want you to pay close attention to those first 5 years. It can be brutal. You could see 0 or even negative returns. And this is where most people give up. But the disciplined investor, they just keep going. And then, eventually, the market rewards that patience. The real growth, that magic of compounding, it only happens after you've proven you can stick around for the tough parts. So here's the bottom line. Forget trying to be a genius. Forget trying to time the market or find the next hot stock. The market doesn't care about any of that stuff. It has one simple mechanism. It rewards those who show up consistently and stick to their plan over the long haul. That's it. So as we finish up, I want to leave you with this one question. Take a hard look at your strategy, your actions, your mindset. Are you intentionally building a robust, long-term portfolio that's designed to hit your goals? Or are you just playing a game of chance and hoping for a lucky break? The choice is yours.
Learn how to build a long-term investment portfolio, manage stock market volatility, and invest smartly in U.S. equity and debt funds. Subscribe for simple wealth-building strategies that actually work. Speech balloon: are you a disciplined investor or emotional investor?